Hello everyone, and welcome back to the channel. Today we're diving into the currency markets, specifically looking at the Australian dollar versus the Japanese yen, or AUD/JPY. This pair is catching a lot of attention as it holds its gains around the 103.0 mark. So, what's driving this action? Let's break it down. The big news is coming out of Tokyo. The Bank of Japan just announced its latest policy decision, and as many analysts predicted, they've raised their short-term interest rate. The hike was 25 basis points, moving the rate from 0 up to 0.25%. This was a unanimous decision by the board, which sends a strong, unified message. Now, you might be thinking, a rate hike should strengthen the yen, right? Well, not so fast. The market had already priced in this move, so there wasn't a huge surprise factor. What's more, the Bank of Japan signaled that even with this hike, real interest rates are going to stay low for the time being. They also mentioned that further hikes could be on the table, but only if their economic forecasts hold up. This cautious, wait-and-see approach means the yen isn't getting the massive boost you might expect from a rate hike. Traders are seeing this as a very gradual and careful tightening cycle, which is keeping the yen relatively subdued. Now let's flip over to the other side of the pair, the Australian dollar. The Aussie is finding solid support, and it all comes down to inflation. The latest data on consumer inflation expectations in Australia is reinforcing the hawkish stance of the Reserve Bank of Australia, or RBA. What does hawkish mean? It means the RBA is more likely to keep interest rates higher for longer, or even consider another hike to combat inflation. When consumers expect prices to keep rising, it can become a self-fulfilling prophecy. The RBA is very aware of this and is committed to bringing inflation back down to its target range. This strong stance from the RBA makes the Australian dollar more attractive to investors, especially when compared to currencies like the yen, where the central bank is being much more cautious. High interest rates tend to attract foreign capital, which boosts the value of a currency. So, when you put it all together, you have a scenario where the Bank of Japan's move was expected and accompanied by dovish forward guidance, keeping the yen from strengthening significantly. On the other hand, the Reserve Bank of Australia is staying firm in its fight against inflation, which is propping up the Aussie dollar. This difference in central bank policy and outlook is the key driver behind AUD/JPY's current strength. It's a classic case of policy divergence creating a clear trend in the Forex market. We'll be watching closely to see if the pair can break higher or if it finds resistance at these levels. That's all for today's update. If you found this breakdown helpful, be sure to hit that like button and subscribe for more market analysis. Thanks for watching, and I'll see you in the next video.